We're going to start very, very soon. All right. Very good. All right. So we are on the top of the hour, 11:01 here in San Francisco on July 5th, 2019. I am very happy to have everybody here on this call, on this webinar. As usual, this is part of our weekly webinar series, and the goal of these webinars is to have a chat with our stock cards users, with new users specifically who are just joining the stock card community, and to answer their questions. And by way of answering their question, we always end up doing quite good research together, and a lot of times we end up the companies that we have on our radar. So this is always end up being a live research session, stock market research session with our users, which is always fun. And so without further ado, I want to get into the topic of today's call. One of our newest users, Michael, submitted a question. He didn't put his last name, so that hence the question mark here on the screen for you. But thanks, Michael, for submitting this question. I think you are one of our newest users. Just haven't looked up any stock card or used stock card in the past. And you asked the question when you signed up for this webinar about how to get the most out of it. So I replaced it with a stock card, how to get the most out of a stock card. And I think it's a very, very good question for first time users of a stock card. But also, I think if you've been using a stock card, for good question for first time users of a stock card. But also, I think if you've been using a stock card for a while, it might be worth paying attention to this one, because it will show you how we built the stock card for stock market investors like you, and then how you can get the most out of it, whether you're a forever free account holder or maybe you're one of our more premium users. And I sure hope you are one of our premium users, or you become soon one of our premium users. But regardless, we love all of our stock card users, free, forever free starters, or even the premium ones. So thanks, Michael, again for submitting this question. Before I jump in, just for you or those people who don't know me, I'm Hoda, co-founder and CEO of StockCard. I've been a lifetime investor. I'm also the portfolio publisher behind the StockCard's flagship portfolio called Roll with Our CEO. So if you go to on StockCard's flagship portfolio called Roll with Our CEO. So if you go to on StockCard's portfolio store on the top left, usually mine overperform most of the portfolios there. So I'm the portfolio publisher behind that. And I'm an economist and a blogger. And I'm also a podcast host for our weekly podcast series, Intelligent Renegade Investors podcast. So all that to say, and I'm very glad to have you and everybody else on this call. Okay, so why did we even made or build StockCard, and why we keep improving and enhancing and build additional features and updates into StockCards, or do these webinars, or run a Facebook group, or run podcast? It's because we're all do-it-yourself investors here at StockCard. We make our own investment decisions. But we also know there's here at StockCard, we make our own investment decisions. But we also know there's this gigantic wall of different issues and different problems and different barriers between us and making good investment decisions or mistake-free investment decisions. And let me go through it. I mean, as a stock market investor, or even a starter, if you are new to investing, you're probably already familiar with most of these things and experienced. But let's go through them. So a lot of times on top, we have things about the knowledge and know-how of how to make good investment decisions. So sometimes we don't know how to do it. Sometimes it's just overwhelming experience, because there is, when you Google things, or you go online, or different stock market research tools, there's just tons of information there that is becoming overwhelming to make an investment decision. And a lot of times, even if we know what things are becoming overwhelming to make an investment decision, and a lot of times, even if we know what things are, how things are doing and how things are going, it's just time consuming to do good investment research. So there's this wall of know-how and knowledge and time-consuming issues. The second category of problems that exist that you're familiar with is a lot of times the recommendations that we get out there, maybe on a Facebook group, maybe on a Reddit thread or wherever, even Seeking Alpha or articles you see online, they're unvetted recommendation. For one, you don't know whether the author or the provider of the recommendation has done the proper amount of research, or they're just writing an article. You also don't know whether they really believe in this recommendation they're giving, because you don't know whether they're putting their own money behind where their mouth is. And if you want to pay for an expert advice, usually tends to be where their mouth is. And if you want to pay for an expert advice, usually tends to be very expensive. And the last bucket of issues that we have, and you're maybe familiar, is just investing. It's an emotional thing at the end of the day. It's scary because the stock prices go up and down all the time. And we're humans. We tend to show emotional reactions when the investments we've made go down, and we feel that, oh my God, we're going to lose a lot of money, so let's sell it. Or if we have been watching a company for a while and the stock price goes up, we start panicking and we fear that, oh my God, we've lost the opportunity of investing. We all have a lot of fear of losing money. So that's why investing, this whole emotional aspect of investing, becomes a big deal. So we build stock card to remove that big wall of barriers that I've been just talking about between us, where are do-it-yourself investors, and good investment decisions. I've been just talking about between us, where are do-it-yourself investors, and good investment decisions. And that's why I gave you this little story at the beginning, Michael, and everybody else on the call, uh, to basically tell you why we've built a stock card. And what you can get from a stock card is obviously using a stock card to remove that big wall that we just talked about between you and making good investment decisions, right? I guess the natural question right now is for you to ask, well, how you do that? How would you remove that big wall of barriers and problems and issues for me as an investor? And I say, good question, Michael. Let's go through it. So Stockcard does three things for you. And I want to use the next 20 minutes or 15 minutes to go through these three things. 15 minutes to go through these three things. Go through simplifying, to go through these three things that a stock card does for you: simplifying your investment research, saving you time during your investment research, and guide you through your investment research, right? So those are the three things we're doing right now with the stock card for our stock card users: simplify the research, saving time during the research, and guiding you through the research. Okay. And I don't want to do a lot of slides immediately right now here, but what I want to do is just take simplify, saving time, and guiding buckets of things that a stock card does for you, and then give you actual examples on a stock card's website. So hopefully you're ready. Follow along. Let's take an example and figure out what can stock card do for you. Follow along. Let's take an example and figure out what can stock card do for you as you become an investor and as you do your investment research. So so everybody who signs up on StockCard, they land on this page. I guess this is the home page, but really that's for people who haven't signed up, I guess, before. The real thing starts from a StockCard search page. So let me click on StockCard search page. This is basically sort of our Google, if you wish, on StockCard, because it has all the tools required for you to get started with your investments. So I told you about how stock card can save you time how a stock card can simplify your investment research. So as a first step, if you remember here, simplifying. So I want to go through one research example, which would show you how the simplification happens, right? So obviously, you can you can come in on the stock card page, and the most important things everybody do the first day when they're researching, they look up a company that they've had on their radar for a while, or the company that they might have invested in it in the past, or maybe it's a company that they have been researching a little bit online to see whether that company is a good investment for them or not. Okay, so let's say, for example, this morning I've been thinking about a company called Carter's. And Carter's, it's a producer or seller or manufacturer of I guess baby clothes. So it's a retailer of baby clothes, and so that's why the ticker is CRI. So on the previous page, obviously I saw it when I was on the stock search page. I saw it right here, but like you could have just simply searched for Carter here, and it would have showed up either by ticker or by ticker symbol or by name. So let's say you've heard about Carter's on in the news, or somebody recommended it to you on Facebook group, or wherever you get your information. So you come and see whether you want to see whether Carter is a good investment for you or not. So all publicly traded companies on stock card get this, what we call, this is really the stock card. It's an interactive online page that visualizes and summarizes all the information you need in order to make a good investment decision. So first thing you see in terms of simplification, usually if it's an article elsewhere, you have to read through the article and pick up the information you need, small information that is spread out around the article. Or if you are on company's annual report or quarter report, you again need to read all that report and pick up the information that helps you make good investment decision. And even if you are on Yahoo Finance, for example, if I go, let's say, look at Yahoo Finance and look at for Carter's, let's see what kind of information is there, and how stock card can save you time compared to something like Yahoo Finance, right? So if, for example, you're looking for Carter's, ticker CRI, on Yahoo Finance, when you land there, and there are tons of information there available, obviously, for you. But the problem with the information here is that you need to know how. How you gauge or make a decision based on, for example, PE ratio. First of all, you need to know what PE ratio is, or you need to know what EPS is, and then you need to know what does a 16.10 of PE ratio mean, and how would you use it, right? Same for any other information. The problem with something like Yahoo Finance is that you have all this information that would probably you need in order to make good investment decisions, but they're all coming in a very confusing format. And what happens is that you need to know how you would use this financial information to make good investment decision, right? So these informations are all publicly available mostly, but the first thing you need to know is that you need to have the financial background to be able to interpret this information. So on the stock card, we've done that step for you. We went and connected the stock cards to same or similar source of information that Yahoo Finance has. But what we did one step further, and we are basically summarizing and visualizing all the information you would need in order to make a good investment decision on our platform. So for example, you see company strength here is green. This is, as you would imagine, is that it's like a green light on traffic lights. So this company has a strong operations. This operation is green. And you can always click on see why. in order to see why why we're saying this company's operation is strong. You see the company has a relatively good leadership team because it's yellow, so it's not bad. It's not red though. Sales leadership team because it's yellow, so it's not bad. It's not red though. Sales growth is um is is relatively stable. So the company has had 1.8% growth rate in terms of revenues in the last fiscal year. So the sales is relatively flat, and it's also expected to grow a little bit more than 2% in this current fiscal year. And the past 3 years as well, here as you see, the growth rate of the company in terms of revenue has been around close to 5%. So that's why it's not massively growing or rapidly growing company from a sales point of view. That's why it gets the yellow, but it's still growing. And then there's a bunch of other things that are very good about this company. Earnings per share. This is basically profitability, the bottom line for the company. It's all green, and this is basically profitability, the bottom line for the company. It's all green, and when you look at it, say it has per share the company has at the end, after it removes all of its expenses, has about more than $6 in earnings left. And it has always this is the last fiscal year and then the last 12 months as well. So June to June, or July to July, or July of this year to July of last year, also it has been positive. And from a profitability or earnings point of view, the company the trend has been stable. So again, it's not like massively rapidly growing company, but it's a company that is growing slowly but has a very stable profit. And when you compare or earnings, when you compare that earnings to similar companies, these are similar tickers that this company is being compared to. Compared to that, this company is already doing very well. So honestly, compared to that, this company is already doing very well. So on a stock card, you see very fast and very quickly, you can get guided to all that information that you've seen and you can see elsewhere, but they're structured and compared to their competitors or translated into things or insights that would help you make a better decision. And so it took us maybe 2-3 minutes, and we didn't go through all of it, but all of them are basically similar, right? Like you could look at the debt to equity ratio. You could look at the current ratio. You could look at free cash flow. You get all that information that is elsewhere available to you in a table format on a stock card. They're simplified in a color coded based on the traffic light color code logic, and you can easily figure out what this company is all about. So with that logic that I explained to you, the company has a great market potential. The company I explained to you, the company has a great market potential. The company has a very strong operations. From a historical point of view, the investment return of this company hasn't been the best because it's yellow, but it hasn't been losing money that much as well as an investment. And share price of this company, this is basically, if this was green, it would have told you that this company is now undervalued. So the price is much lower than what we would see the value of the company be. And if it was red, it would have told us that this company is overvalued. So the price is higher than what mathematically we can calculate as the value of this company. But when the company's first share price, like for Carter's, it's yellow, it means that the company is neither overvalued or undervalued. So this is a company that is fairly priced at this current price level of $95, a little bit more than $95 as of this point. So you can get for $95, a little bit more than $95 as of this point. So you can get this information for any publicly traded company that is listed on a stock card. So you see, like just right now in 5 minutes that we've been talking together, you've been getting all the information you need in order to get a sense of what Carter is all about, which is a lot more simpler compared to where you would be able, elsewhere if you want to get similar information. And you can do that for everything. So I looked at Carter's, which is if you click on key information, by the way, like it gives you what Carter is if you don't know that company and provides some information about that company. But as you get to use stock card more and more, you come to know all these like little nice features that a stock card has. But what I wanted to say is that the format of a stock card are always consistent. So you can easily collect information and also compare different companies that you have in your mind. So maybe you were looking at Carter's because you've heard it, and then maybe you ask yourself and say, but I've been always I'm thinking about investing, maybe in, let's say, in a technology company, or maybe in a coffee company. Maybe you hear about Carter, but you've also always wanted to invest in a Starbucks, and you see, oh, I only have maybe a couple of $100. So at this time, I want to make a good investment decision. Maybe instead of quarters, I want to invest in Starbucks. Or maybe I want to know what Starbucks is. So on the search bar again, either on top of the actual stock card, or you can go back to that search page as well. But you can look for that any other company that you have in mind. So we ended up, and you can look for that any other company that you have in mind. So we ended up on Starbucks, the stock card. And as you see, it's the same format as you've seen the Carter's format. And immediately what jumped out of this page for me is that, similar to Carter's, Starbucks is in a growing market. The market potential is good. The company has a great operations as well. Carter had the green on the top for both of these things too. But investment return for Starbucks in the past few years, it's been great. So that's why you see for Carter's, we had a yellow here. And then for Starbucks, we have a green here. And then share price sounds, it's fairly priced for Starbucks as well at 87.66. So as you see, now you see there's a little bit of difference between a Starbucks and Carter already. And if you click on it, you come down and see Starbucks past investment return has been year to date and if you click on it, you come down and see Starbucks past investment return has been year to date has been relatively similar to the average of the market. But if you've invested in it in the past 1 year, you have been outperforming the market. 3 years, it wasn't outperforming, but overall in the 5 years, in the 10 years, have you been an investor in Starbucks? It would have been better investment compared to investing the average of the market. And maybe one other reason for Starbucks being better investment return is because Starbucks is a dividend paying company, because that dividend is green. So it pays 1.8% dividend per share. And the good news is that Starbucks have been increasing its dividend the past 3 years, right? So maybe that's the reason between the difference that exists in between Carter and Starbucks. Now let me go back to Carter. So that we can just take a look and see whether that what I said is. We go back to Carter. So that we can just take a look and see whether that what I said is correct. So if I click on the investment return for Carter, oh, actually, it's interesting, right? So Carter is also paying dividend to its investors. So there's probably other operational reasons that we need to investigate here right now to figure out why Carter didn't have as good as investment return in the past couple of years compared to something like stock card. Why this color is yellow and Starbucks was green. So let me pause here and see if there is any question that is submitted by you, Michael, or anybody else on the call. And but back to what I was trying to explain to you, this. So before we took a little break to answer some questions by webinar attendees, and we had a little bit of a technical thing here, and then we came back. We talked about the simplification process, and I'd love to be able to explain to you things around how StockCard can save you time and guide you through your investment research. But we've already at our 30-minute time break, what we've put for this webinar. So maybe this is something that we can take a look later on in another webinar to talk about how StockCard can save you time and how StockCard can guide you through your investment research. And so make sure to join in the next version or next episode of StockCard's webinar, and we will talk about how StockCard saves you time and how StockCard guides you through your investment research. And yeah, in order for you to sign up, obviously it's the link for signing up for the webinars. It's on our blog. So if you go to blog.stockcard.io/webinar, there is a link. You can reserve your seat for upcoming versions or episodes of Stock Cards webinar. You could choose the date from this calendar and pick it up, or you could see the previous recordings of the previous episodes all here on the webinar. So, Michael, thank you again for submitting this great question: how to get the most out of a stock card. And hopefully, this short 30-minute webinar helps you to get started in order to figure out how a stock card can simplify your stock market research. And hopefully, you get a chance to join in the next episodes of this webinar and get more about the other two things that a stock card can do for you, saving you time and guiding you through your investment research. Thank you, everybody, for joining this edition or this episode of Stock Cards weekly webinar, and hopefully you reserve your seat on our blog.stockcard.io/webinar, and we'll get a chance to talk to you again very soon. Thank you, everybody, and have a great day.